Hello, everyone. If you're in your 20s and you've saved up $1,000, first off, congratulations. That's a big accomplishment, and I'm proud of you. But second thing, this video is for you because I'll be going over a fun little tier list of some of the investment ideas and different asset classes that you can invest that $1,000 into. Honestly, I'm kind of making this video for myself just because I have $1,000 now that I've saved up, and I did my own research, which I do anyway, but I wanted to share that sort of research with you guys in a fun, entertaining way, going back to my philosophy of educate, entertain, and execute. And so the execution piece is going to be me probably putting, a couple hundred in each of these categories. However, I do really want to share the financial framework that I use in, going about doing this sort of research and that kind of stuff, just because I love, talking about finances, and I love finance in general. And I think it's important for people in their 20s, especially starting out, to have these sort of frameworks and mindset when it comes to investing. So I'll be ranking 14 different investment classes, asset types, whatever you want to call it. And I guess the main thing that you can look at is obviously the return on investment. How much money will I get back if I put in $1,000? Now, while that's great and it's important to think about that, I'm going to be looking past that and looking at 6 different criteria that I use in analyzing this. And so the 6 that I use are accessibility. So am I able to start today? Risk. Could this potentially wipe you out? Liquidity, meaning how easily can this turn back into cash? Scalability. Can this eventually turn into $10,000 or $100,000, given a certain amount of time? Learning value. I think this one's really important just because people in their 20s, they kind of overlook the learning value of, what they spend and what they invest in. So this is just, am I able to learn skills? And then lastly, stress level. Will this investment keep me up at night? But let's just get into the meat and potatoes. What I do want to say is that, again, this is for educational purposes only and entertainment purposes. I'm not a financial advisor. I don't plan on being a financial advisor, and I don't want to do that. Also, preface, I'm not going to go into the super nitty gritty details about each of my decisions on the tier list. However, I do have this all basically written out and analyzed into an Excel spreadsheet. And if you guys are interested, I could make another video following up with basically my thinking behind it, where I think it could be useful if you're interested in how someone who knows investing, how someone like that puts this into a spreadsheet and calculates what's the best outcome to put your $1,000 in, or if it's a hybrid. All right, moving on. So I found this pretty much template top investments tier list. So I'm just going to kind of use the images that they have here. Some of them don't relate to the topics, but I'll just try to make it fit. Number 1 we have is stocks of individual companies. So think of Tesla, Nvidia, that kind of stuff. Personally, if you have $1,000, I don't think spending a good chunk of it into a singular company stock would be really worth it. Now, I do think the accessibility is there. It's super easy to do that. The risk level, it could maybe wipe you out depending on how much research you do. But the scalability is there. You could probably get 10K depending on, again, the amount of research. For example, if you put $1,000 in Nvidia in 2021 or something, you would totally have 10K plus right now. But again, it's how realistic is that? Not that realistic. And so I'm going to put this at B tier. Next, we have index funds. These are a culmination of stocks that basically resemble a benchmark. So the S&P 500. Think of VOO, for example, that matches SPY, aka the S&P 500. I think this is a way better alternative than investing in regular stocks. And so I'm going to put this at A tier. And so what can I use for that? Maybe this one. Yeah, use this. That's the index fund. Ooh, okay. Number 3, Roth IRA. I'm sure you guys have seen some of my other stuff about Roth IRA, and I love it. It's amazing. It's so important to have, and I think not a lot of people in their 20s put money or even max it out. And so, again, I'm putting this as S tier just because it's basically maxes out all of the criteria, well, except for the risk. There's pretty much like very low risk. Again, depending on how much research you do. But for this one, I'm going to use this Home Sweet Home because a Roth IRA is basically your home. Moving on. Bonds. Number 4, bonds. So like treasury bonds, municipal bonds, corporate bonds. Most of these are backed by the government, and while they could, be beneficial to have, if you have $1,000, I don't think your first inclination is going to be shit, let me put this $1,000 into a fucking bond. Absolutely not. I'm rating the C tier. Now what's a bond? I mean, pick something horrible. We'll go with this one. That's the bonds. Because let's just say that's the government wanting your money. Next, high yield savings account. I love talking about high yield savings accounts. Again, it could also be your emergency fund, the same thing. Having something give you 4% plus annually is crazy. Having some of your $1,000 go towards your high yield savings account is spectacular. And I'm going to put this at S tier because zero risk, basically no risk. It's easy to start, and the scalability, as long as you're putting some more money in there every month, and you can easily turn it to cash. All right, next we have ETFs. Now, while they are similar to index funds, ETFs are a bit more broad. They have lower tax fees and lower fees in general. And I just think they're a way better alternative than bonds, of course, and stocks in general. So I'm putting this, I'll probably do this one, putting this at S tier. I love ETFs. Ooh, okay. This is one of my favorite things to invest in. Going back, taking a step back, this is for people who have $1,000. I'll assume you haven't really invested in anything before, and that's why you're watching this video. So something like this might not be the first thing you want to go to, but a REIT or a real estate investment trust, these are just companies that buy a bunch of real estate either around the US or around the world, and they find tenants to, inhabit office buildings, whatever they specialize in, and they take 90% of their annual revenue and they give it back to the shareholders. One of my favorite REITs of all time is Realty Inc. Ticker symbol O. A couple months ago, they were trading at like 58, maybe 56. I was like, shit, they just expanded into Europe last year, and now they'll start getting in great financials from reaping those rewards of expanding into Europe. Lo and behold, they're trading at $65, $66 now. And so personally, I would rate this S tier. However, for the purpose of this video, I'm going to make it A tier just because I'm thinking about people who haven't invested before, who don't know what it is. Because there is a lot of research to go into which REIT is the best, so to speak, that gives you a better return, that has, a good long-term forecast, and that kind of stuff. I'm going to use the house for this just because with $1,000 you can't buy a house. There's no way. So REITs are a good alternative because that's sort of like, that's technically your real estate, diversification. Next, dividend stocks. Again, I love dividend stocks. This could be, the form of a REIT. It could be a single company, so like Coca-Cola, Ford. These are specific to dividend stocks and companies, not similar to the first one, because Some companies don't give dividends, like Tesla, I don't think. So I'm going to put this at A tier because I think it is pretty easy to get into. Again, you just have to do some research on the company. Mutual funds. Now, when you think of mutual funds, I don't think they're better in any sort of way as opposed to index funds. And index funds are not better than ETFs. And so I'm putting mutual funds at B tier just because there are way better options. I'm going to use, I'll use this for mutual fund. No idea what that is. Next, day trading and options trading. Now, while there is immense value in like learning these skills, 99% chance you'll probably lose a lot of money from trying to day trade or options trade. If you're a beginner, let's just say you just got $1,000 and you don't know anything about investing, this is not the first thing you want to do. However, there are like the other criteria they do factor in. So like there is a lot of scalability in this. There is very high risk. I will say that there's very high risk. And it is pretty easy to just start today. And you can easily turn it back into cash. So for those reasons, I'll put it at C tier. I'm gonna use this one. Day trading and options trading. It's not good. Cryptocurrency. Now, crypto's great for, 5% or less of your entire portfolio and or entire net worth, just because it's very highly volatile, meaning that there's insane amount of risk. And I mean, there is scalability. There is a lot of learning opportunity as well, but the stress of, losing $1,000 in like a day, if you just put it in Bitcoin, you just lose that very fast, but you could also gain it really fast. So that's a lot of stress. And for someone just starting out, I don't think that's the best bet. As you could see, there are way better opportunities. And so for that reason, I'm going to put it at D tier. Don't hate me in the comments. So next, I've been watching a lot of Togi on YouTube. I fucking love him. He's amazing. He's also my financial advisor, so to speak. But I put gambling on here. That's number 12. Now, while again, his level of gambling is way different than, everyday people doing like $100 or less. I wish I could meet him. That'd be so fun. But I think that's for when I'm like way into the future, where I'm able to actually gamble with him at that level. But beyond the point, should you gamble your $1,000? Absolutely not. That's going in D tier. I'm gonna put that with this one because it's so easy to lose so much money so fast. I went gambling once 2 or 3 years ago when I lived back in Reno with some of my buddies for one of my birthdays. I put $200 into a blackjack table. I lost that in about 2 minutes or less, actually. It was like a minute because each hand was like $10. It was crazy. It was like a minute. I lost $200. Didn't win a single time. It's crazy. So yeah, I wouldn't really gamble unless I had a bunch of money that I could just throw, which probably won't ever happen. But I still want to meet Togi and gamble with him. That'd be fun. Number 13, I think, is commodities. So think of gold, silver, oil, that kind of stuff. Stuff that we need. While it is important to have a like small percentage of your portfolio allocated into commodities, I don't think it's that important for someone who just got $1,000 to invest in right away. As you can see, there are other options available at the top. Again, there would be not really amount of stress, no real amount of stress. It is pretty easy to start today, especially in this day and age. There is scalability. I mean, gold is like 5,200 now, which is absurd. I remember in 2019, it was like $1,000. So nice. But for the purposes of this video, I'm gonna make it C tier. Lastly, I hate this so much. A certificate of deposit, or a CD as they call it. Basically, it's a government-backed, low-risk savings account there where you just give, a significant portion to the government, and then they're like dividend payments, so it's like coupon payments, a certain percentage, interest rate back. But the problem is that the money is locked away. So it's basically illiquid until the time runs out. Some of these CDs could be 12 months, some could be 18, some could be 5 years. So if you put, 1,000, even more, $10,000 into this, you won't see that. And the interest rate's like 4%. So, I mean, you might as well just put it in like a high yield savings account. So I'm going to make this, shit, I hate this so much. I'm making it D tier. I just hate it. I hate it. Now, while I try to avoid bias in these videos, I hate it. I will find a way to justify my D tier. There's no learning value. There's literally no learning value from a CD. There's no scalability. I mean, it is pretty like low risk, but again, like the government taking your money, I'd rather put it elsewhere. I think it is easy to start, but I've never done it, so I don't really know. All right, well, that concludes the investment tier list. I think we have a good arrangement of this, and I think it is pretty balanced, as you can see. Anyway, if you guys did enjoy the video, please leave a like, comment which ones you would prefer to do, or if you disagree with my ratings. Also, I in the spreadsheet that I'm looking at here, where I have the name of the investment, definition, my ranking, the analysis that goes with it. I also have different tabs for a 10K video and a 100K, because initially I was going to do this for $100,000, investing $100,000 where you could put that money. But then I was like, no one's going to relate to that because we're broke as fuck. So I changed it to $1,000. And then I'm thinking I make this into a series where when I have $10,000 available to invest, I'll make that video. And then when I have $100,000 to invest, I'll make that video. And then I'll just execute to whatever I think, whatever I want to go with from the video, which is great. So leave a like if you want to see that in the future, and hope you all have a great day.